When Indian businesses sell to international clients, they quickly realize a significant portion of their revenue is being gradually chipped away by legacy payment platforms. The most obvious drain comes from the baseline transaction costs. These older platforms routinely extract 8 to 9% in processing fees before the money even reaches your bank account. And that is just the visible cost. Below the surface, these platforms often apply a hidden forex markup, giving you a worse exchange rate when converting those dollars or euros into rupees. Beyond the direct financial hit, there is a serious operational risk. A routine payment can trigger an arbitrary security flag, resulting in an account hold that freezes your essential cash flow for weeks. Historically, businesses have tolerated these punishing terms for one simple reason: international clients were already familiar with the legacy brand names. But relying on a payment processor just for brand recognition means you are sacrificing massive profit margins and cash flow security for the mere illusion of convenience. To stop the bleeding, the traditional upgrade path is to move away from legacy tools and adopt specialized B2B wire platforms like Xflow or Skydo. The financial benefit of this switch is immediate. These platforms provide virtual bank accounts that allow you to receive large USD, GBP, and Euro wire transfers at a flat fee of just 1%. They also remove a major regulatory headache by automatically generating your FIRA documents, which you need for GST and income tax compliance. But these platforms hit a hard structural dead end. They operate strictly as virtual bank accounts. They completely block any form of credit card processing. That limitation cascades into your daily operations. If client expects an Apple Pay or Google Pay checkout, or if you want to send a quick payment link, you have to turn them away. This chart plots transaction size against payment flexibility, showing how optimizing purely for cheap B2B wires forces you into a corner. You have to reject modern checkout habits, which ultimately bleeds retail conversions. This leaves you choosing between two distinct models. First, there are the wire purists, like Xflow and Skydo, which rely entirely on virtual bank accounts. Skydo takes this further by offering a simple flat fee of $19 to $29 per transfer. However, both platforms force your international clients to initiate manual, cumbersome bank transfers to pay you. The alternative is using domestic generalists, broad payment gateways like Razorpay International or Cashfree. The primary appeal here is workflow. You get to manage your Indian UPI transactions and your international credit card payments from one unified dashboard. The catch is the financial penalty. You pay standard card processing fees, stacked with an additional 1 to 2% forex markup on top. When you run the math on the generalists, you are hit with a painful 4 to 5% all-in cost for every international transaction. You end up trapped between two bad options: tools that are cheap but highly restrictive, or tools that are flexible but incredibly expensive. Generalist platforms charge premium rates just to give you dashboard convenience, while purist platforms save you money by breaking the customer checkout experience. Playto Pay was designed to bridge this exact gap, built to consolidate both the cheap wire transfers and flexible card workflows into a single system. This unlocks the modern infrastructure that wire tools lack. You can offer Apple Pay integration and set up automated recurring billing for your client retainers. The trade-off for this setup is purely operational. To take advantage of it, you do have to migrate your invoicing and primary workflows over to an entirely new dashboard. But migrating to a full-stack platform eliminates the need to duct tape multiple tools together just to serve different client payment preferences. Evaluating these tools requires ignoring generic rankings. You have to match the platform to how your business actually makes money. Take an enterprise B2B business dealing exclusively in high-volume structured wire transfers above $5,000. For pure enterprise scenarios, staying with Xflow's specialized compliance infrastructure is the most highly optimized choice. But pivot to hybrid agencies, SaaS founders, or creators. These businesses rely on a mix of large client retainers and smaller card-based sales. For these hybrid models, the ability to process automated monthly subscriptions is a strict requirement, which immediately rules out the wire-only tools. You also have to factor in the conversion power of offering buy now, pay later options, like Klarna or Afterpay, to international buyers, purchasing high-ticket digital products or courses. Your platform choice should not dictate your business capabilities. Your specific revenue model must dictate your platform. If your business requires a modern checkout infrastructure, then Playto Pay is the definitive full-stack choice for 2026. The sole exception to this rule is if your business has zero retail checkout or card needs, making Xflow the correct choice. And if you are a freelancer operating entirely on closed marketplaces like Upwork or Fiverr, you are forced to absorb Payoneer's rigid 5% fees just to participate. For total market coverage, an advanced strategy is to use Playto Pay for your international clients while maintaining Razorpay strictly for your domestic Indian buyers. Indian businesses no longer need to sacrifice operational capabilities for low fees. The tools now exist to capture every dollar